What is going on, traders? Welcome back to the Traveling Trader. In this video, I'm going to be discussing the current market situation, what I think the chances are of an upcoming crash, even though the market has been making all-time highs day after day, why you are feeling like your portfolio is down. I see this question come up in the YouTube comments or sometimes in the Discord chat. People think that there is a correction currently happening, and it's not the case. The correction might be in your specific portfolio, and we'll talk about the symptoms and what you could do to address that. I'll also give you some ideas on how to hedge your portfolio, how we're doing it in the trading group. At the end of the day, this is a free market. You might think that the market is manipulated. You might think that the Fed has too much control over the market, or that big institutions have control over the market. But if you know how to trade options specifically, you could take every single position in the market. You could take a bearish position, a bullish position. You can even take a neutral position like an iron condor where the stock doesn't even have to move for you to make money. So I'll go over some of these options plays as well and give you an example of what to do if you're not in the trading group. And lastly, why you should not buy the dip unless, and we'll go through that unless in this video. If you want to learn how to trade options, in my opinion, the best way to leverage any market, a bullish one, a bearish one, a neutral one, I did finish my full options course. Link is in the description below. It takes you from A to Z, literally starting from what is an option all the way to doing advanced option strategies like iron condors, the wheel, diagonals, calendars, vertical spreads, etc. It's all explained cover to cover in my options course. There's a link to a $100 coupon in the description that will be good until May. And if you want access to our private trading group, link is in the description below. Let us get right into it. I'll start off with the market update. Let's take a look at the NASDAQ. Now, as you recall from my previous videos, the NASDAQ is the only index that actually saw a correction. A correction means a drop of 10% or more, but less than 20%. And the S&P did not see a correction yet. The Dow Jones did not see a correction yet. The NASDAQ saw a correction back here in the beginning of March where we dropped more than 10% just below the 100-day moving average. And as I was saying in my last market update video, the NASDAQ always has a habit of creating these handles after the cup, this rounding bottom called a cup. It always has a habit of creating a handle in the same way that we saw last year in September and also in November. And you can literally take this back to the history of the NASDAQ. Every time we create this rounding bottom at the top, you tend to see a retracement, and retracements are necessary for another leg up. Straight linear movements are not natural in anything in life, not just in trading. Things always tend to revert to the mean before then progressing once again. If we take a look at the S&P 500, I mean, this is madness. This channel has been going on since September 2020. We're in this ascending channel here that looks kind of like an ascending wedge, but whatever, trend is your friend until the end. And until this trend is broken, then we have to assume that it will continue. Now we are at the top of this channel above what is called the Keltner channel. Now you don't really have to know what that is, but basically the market is overextended here. You could see that we are in overbought territory in the RSI and the MACD starting to curl downwards. I would not be surprised to see a little bit of retracement. If you remember from the last video, we bought calls on SQQQ, which is the inverse ETF to the NASDAQ. On April 19th, I also sent out a SPY put spread, which was basically a hedge against the S&P 500 dropping, netted 40% on that, and I opened another one today that is currently up with the market pullback today. Now, the market pullback supposedly due to the new administration's tax plan. However, that tax plan was already known way ahead of time. News is just an excuse a lot of times for the market to drop or to rally. A lot of times we see the market rally on bad news. A lot of times we see the market tank on good news. The news doesn't have as direct an effect as you think. If the market is ready to draw down, nothing is going to stop it. If the market is exuberant and it's ready to rally, nothing is going to stop it. The news is really just sprinkle on top. As I said today, we sent out an alert for another SPY spread as a hedge, this time in the form of credit call spreads. In terms of options plays, we also had a Neo vertical spread, a CCIV cash secured put, a BA diagonal spread, a Netflix iron condor. All of these plays were up. Now we're currently taking a beating on the Mara calls that I opened, betting that Bitcoin would rebound. Now those calls expire May 21st, so we still have a month left if Bitcoin rebounds here, but currently down more than 50% on those calls. So it's not all rosy. I don't want to give you that impression. Of course, you will lose on options plays. The point is to win more than you lose. And again, if what I'm talking about sounds like Spanish, the iron condor, the diagonal spreads, the vertical spreads, consider taking the options course, or you can do your own research. Of course, there is no purchase necessary, but I put together the course for your benefit. All right, so in conclusion, let's talk about the market, and then I'll talk about how you can hedge against your portfolio. I do think that the market is going to see a drawdown. I don't think that the market will enter crash territory, not yet. As I said before, we've never not had a multi-year bull market in the United States. This bull market is currently a year in, and we just started year two. Year two of the bull market has an average return of 17%. And we are very much on track for that. As a matter of fact, year to date on the S&P, we're already up 12% since January. And as I stated before, April was the best month historically to invest in stocks, and we're up 5% alone in April. So I do think that the market has a chance to draw down back to the 50-day moving average on the S&P 500, which would play nice leading into the end of April, beginning of May earnings, where we can start another leg up and hopefully into the full reopening by summertime. Barring any sort of crazy virulent strains of the virus or some insane shutdown protocols, there will be some great buying opportunities here. Part of the reason why I said do not buy the dip unless. We'll talk about that in a second, but I just want to address one important thing really quick, because I think a lot of new traders are watching this and a lot of new traders are in this position that I'm about to discuss. Why do you think that your portfolio is down? Why do you think the market is in a correction? Well, it's because simply of your portfolio distribution. See, if the market is down 1%, say the S&P 500 is down 1%, but your portfolio is down 20%, then obviously there is a distribution problem there. You are likely overweight in very risky stocks. And as I said time and time again, even in my last penny stocks video, which yes, I did, because there is a demand for penny stocks videos, in the beginning of that, I said, I don't believe this is the environment for penny stocks. And I think that you should be very aggressive with your stop limits. I did a whole video on how to set stop limits. It was the video right before this, so check it out here. But I still believe that we are not in a risk on environment. The market is either looking for high potential growth plays or high potential value plays, and that's it. They're not really looking for risk. The reason that penny stocks pumped from the end of last year to this year is because of the exuberance. But right now the market is frothy and everybody is on shaky terms, so they are on the lookout. And it's very hard for penny stocks to pump in that manner, although we did see a nice run up in the last couple of days, but not nearly enough to regain some of the losses that people have. So I will just say that if you are going to be trading penny stocks and or risky stocks, be aggressive with your stop limits. There's nothing wrong with it. All right, so now let's talk about the warning about buying the dips. Here is, I'm gonna give it to you plain and simple. There are only two damn reasons that you should be buying the dip. One, you have a very high conviction in that stock long term. Regardless of what it is, I'm not going to argue with your DD, even if we're talking about a penny stock. Be honest with yourself. Do you really have a high conviction in that stock, or are you just hoping it would go up because you're holding a large bag? If you truly have high conviction in that stock, you'll find no argument from me. That is your conviction. Two, the only other reason that you should be buying the dip is if you know how to trade using a chart and you spot an optimal technical setup. Remember, trading and investing are two different sports. It's like playing pickup basketball versus a fully regulated league. So if we take a look at a penny stock right now, let's just pick a random one like AITX, and let's just say that you saw that it wicked down to near the 200-day moving average, and you said to yourself, okay, I'm gonna buy AITX here. I'm gonna set an aggressive stop limit at around 0.036, just under the 200-day moving average. Again, go back and watch my video on stop limits where I get into all of this. And I'm going to take profit at exactly this level. That is all well and fine. But you should not buy the dip just because you heard somebody on YouTube throw out a ticker symbol, or because you saw it on StockTwits or on Twitter. In my view, the only two reasons you should be buying the dip right now is the high conviction stocks that you think are going to be great for your portfolio by retirement, or if you know how to trade and you could spot a technical setup. I also did another video on technical analysis for beginners, and you can get a charting software like TradingView for free. So check out that video here if you want to actually be a trader. And the second thing I'll say about buying the dips is I think people do it too frequently. And I see this symptomatically more so with Tesla. You see this often with NIO as well, but if Tesla is at 740, for instance, you'll see some folks put in a buy. If it drops to 720, another buy, 700, another buy, 695, another buy. That is too damn frequent. Yes, dollar cost averaging is a great way to start positions and continue to establish your position in the stock. But you want to buy at identifiable support levels, and you want to make sure that that buy actually has the intended effect of lowering your cost basis. If you're buying at 720 and 710 and 700, that is way too frequent. So on Tesla, for instance, if I got in here at the 100-day moving average and I'm expecting a drop, the next time that I'm going to significantly buy Tesla is potentially at the support level at around $600, or maybe at the 200-day moving average at around 555. And lastly, I think based on where the market is now, there aren't very many great deals. There are some great deals. I think AMD is at a great price right now. A lot of the Bitcoin mining stocks like Mara or Riot, I think, are at the 100-day moving average levels, which to me represents a good first entry. But for the most part, your favorite stocks like Apple, Microsoft, Facebook, Amazon, I mean, those stocks are just at their all-time highs right now. And although while they can continue to push up higher, I think buying right now has very little upside because the gain that you're going to see is likely going to be incremental and not significant. Anyway, traders, that is it for this video. If you got anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know what you think of the current market, whether you think it's going to crash, how you're currently trading it. If you want to learn how to trade options, look no further than the course. Again, a link for a $100 coupon in the description below. Sign up to our private trading group if you want access to all of our alerts. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.